aligned. Okay. So welcome again to the Asset Under Construction Overview session, WebEx session. We will use the participants panel, as I was saying before, to ask questions and get feedback from you. If you have any question at any moment, please try to unmute yourself. And if it doesn't work, just raise your hand with this icon that you have close to the green check. So I will unmute you, and you will have the opportunity to ask. Okay. So yeah, the screen is still blue, so don't worry, you are not seeing anything wrong. If you see my mouse moving around, that's okay. So I'm going to just share the screen. Share the presentation, and you will see it on the right side. So now, can you please see? Can you see Assets Under Construction presentation? Please click on the green check. That's fine. Very good. I'm going to ask you often questions, so I'll need to get feedback from you. And if you have questions, please remember to raise your hand. Okay. Or you can also send me a message in the chat if you have a particular question. Now we're going to start. So this is an overview to assets, the introduction to assets under construction. Assets under construction process, it's integrated with fixed assets in Umoja. So I need to introduce first the concept of fixed assets in Umoja, because some of you are finance and some others are coming from engineering section. So assets under Umoja asset accounting deals with the accounting of fixed asset, which is a subset of non-current asset. What does this mean? Basically, in the whole financial accounting set of modules in SAP, we have they are classified by current or non-current assets. So we are going to deal only with fixed assets. This means that equipment and other type of items are out of the scope of this training. Fixed asset is actually a subledger in financial accounting, which means that for you that are financial users, you know that we have accounts payable ledger, we have accounts receivable subledger as well. So we have accounts payable subledger, accounts receivable subledger, and then we have fixed asset subledger. And all the accounting for fixed assets is tracked there. This is important. Only assets that meet the UN capitalization criteria will have a fixed asset master record in Umoja, and this is something we will see later. So let's say that if we have a building in our compound, there should be something called asset master record in the system that will keep the financial information for the asset master for the asset. Okay. Only the ones that are meeting UN IPSAS capitalization criteria will have a fixed asset master record. Okay. So some important points related to fixed assets is that they have to last at least for more than one reporting period. Now we will see in detail the IPSAS capitalization criteria. So when I said that equipment is out of the scope, it's not completely accurate. Only equipment that meet the UN IPSAS capitalization criteria will have an fixed asset master record. What does this mean? If we have a laptop whose acquisition value is $2,000, it will not have an asset master record, and then because it's not considered as a fixed asset according to IPSAS. Now, it's not only a matter of the acquisition value to be considered a fixed asset. The asset needs to be used for more than one reporting period, more than 1 year. And you need to know also that fixed assets include also intangible and tangible assets. So it's not only buildings, but also if we have a big project that is building software that is intangible, we will have also an asset in that situation. Okay. All right. Now the depreciated or depreciated value is documented in the balance sheet under property, plant, and equipment. This is basically saying that the net book value is going to be tracked. Okay. So what is a fixed asset master record? This is an important element that we are going to work a lot on it. With it. It's a master record in the system that identifies the fixed asset. So they are created, these fixed asset master records, they are created for each individual asset that meets the criteria for an asset to be capitalized. So it will be possible to access to it in the system, to read it and see what is its current value, when it was acquired, all the transactions that happened to it, etc. And it contains important information about the asset, as I was saying, including the funding source, when it was capitalized, what is its useful life, and so on and so on. Okay, is there any question about this? I'm sorry if you're trying to unmute yourself. Just let me know. You just send me. Yeah, if you are talking to me and you cannot hear me, okay, just send me a message. So I will unmute you and I will let you. Okay. So you don't have any other question? Let me continue. So the fixed asset master record is important, and we're going to work during this workshop with it. Now, there are different ways of acquiring fixed assets in general, because now we are still talking about fixed assets. So Abid has a question. Yes. So Abid, you have a question? Now we can hear you if you want. Abid Mulana, you have a question? Okay, you are unmuted, so if you want to say something later, just let me know. So I was saying that fixed assets can be acquired in 4 different ways. They can be acquired through purchase. Okay, this is a process that you normally know when with a shopping cart, and then a particular type of material need to be used. They can be acquired through donations, so they can be donated as part of a grant, or we can get the right to use. And they can be also self-constructed, and this is the part of that we are going to cover during this workshop. So assets can be self-constructed, they can be internally developed, and they are considered, while they are being constructed, they are considered as assets under construction. So this is the part of fixed assets that we're going to cover during this training. There is also finance lease, but as I was saying, the assets under construction are one portion of the whole set of fixed assets that we have in the system. And this is the purpose of this training, and that's why we are explaining this in the overview. So now you know that this asset under construction is part of something bigger that is a subledger that is called fixed assets, and it's a FI ledger. Now, most of the real estate assets are acquired through, construction, are constructed basically. So we have a different set of asset class depending on the type of, let's say, asset we are building. So we have constructing. We have buildings, we have infrastructure assets, we have leasehold improvements, and we have intangibles. We'll see later that each of these elements is an asset class that is going to be relevant for us when we are setting up a project or initiating an activity. Now the AuC cost, so AuC stands for assets under construction. So you will hear me referring to it as AuC. Okay, can you hear me well, please? Or can you please click on the green check if you hear me well? Someone was saying that the voice was not clear. All right. All right, thank you. Thank you. So everybody's saying yes, so I'll try to speak louder. Anyway, so I was saying that the cost of an asset under construction includes material, labor, operating costs, and collected and any other operational costs. And they have to be collected using what is called a cost collector. And this is a key term that we will use during this workshop many times. It's a cost collector. We have actually a session on a couple of days about cost collectors, but for you to get an idea already, all the transactions that you will be performing or different users will be performing in the system, in the Umoja SAP solution, we want them to be tracked or collected by a cost collector, which is an element that will list all these expenses that then later it's important to have them listed to be in order to capitalize them. Okay. So we have two types of cost collectors. We have what is called work breakdown structure, and well, the acronym WBSE, it's the work breakdown structure element. And this is basically just to, if it's new, this term is new to you, it's related to project. Can you please let me know if you know or you heard about WBSE elements before? Could you, if this is new to you, can you please let me know if it's new to you? Just click on yes, please. So I need to know if it's new to you. All right. Okay. So yeah, this is going to, we will discuss this in the following session, but basically for you to get an idea, when we have a project and we want to track everything, and we have and we want to track all the expenses using another module of SAP that is called project systems, we will have this thing that is called work breakdown structure. That is basically a breakdown of the project. So it's a list of the activities and in a way that will create different assets. We are going to cover this in the future sessions, but just for you to be aware that there is something called work breakdown structure. And there is another type of cost collector that is internal order. And you see now that this cross through because instructions from New York budget arrived to let us know that any new asset under construction project has to be supported using project systems and work breakdown structure. So no more internal orders for new assets under construction. All right, this is something that may be new to the people that attended previous sessions. It does not mean that the ones that already started cannot be completed. If they were already started with internal orders, you just continue with the normal process until you complete them, following the same approach. But if you budgeted for a new asset under construction, for an infrastructure, building, whatever, it's now it's a requirement from budget to use project system, and this is why this workshop will focus pretty much on work breakdown structures and projects. Okay, is this clear? Did you understand my point? So please, if you understand the point, just click on yes. For new projects, for new assets under construction activities, you must use work breakdown structures. So do not initiate new construction activities using internal orders, because from the budgetary point of view, is required, and we will discuss also in the session that is called funding for AuC, that will be a funded program, and they want to track. There will be a funded program linked to the project, and they want to track separately for reporting purposes as well. So thank you so much. Now you know that we will not cover much about internal orders. And okay, there are other ways of tracking using service orders, but that is for very particular scenarios where we are providing construction services between or among missions. Okay. So let's continue. If you don't have any question about this introduction to fixed assets, let's say, is there any question about these first 4 slides? You have any point that you want to mention or anything that you want to ask? If you have any question, just maybe write it in the chat or try to unmute yourself. But if you don't have any question, you can always click on yes. Yeah, service. When you see service order, sorry, I didn't introduce this concept. A service order is another type of transaction that is used in SAP to track services provided between entities, internal services. For example, when Unifil is providing workshop or vehicle maintenance services to other entities, they are using service orders to track them. Now, this is an option that SAP gives also in case one mission is using their resources to build something for another mission. So this is a possibility that is there, But at this moment of implementation of this of the implementation of assets under construction, we want to focus on the most important or the main elements, which are the ProAs and so on. And then for this, if you have any particular situation where you think you may need to use service order, we will take it offline because it's an exception. Okay. Yes, exactly. Exactly, that's the point. So you can use service order to apply cost recovery based in terms. Yeah. So if you have a scenario as such, just send us an email and we will take it separately. We are going to focus, especially today, we're going to focus on a high level overview. So from this slide, you need to remember that we will use cost collectors. We will use cost collectors to track all the expenses. And then it's possible to use service order, but it's a very particular scenario. Okay, thank you. So let me continue then if you don't have any other question. Okay. Now we're going to start talking about its capitalization criteria. So what are the capitalization criteria in order to consider an asset as a fixed asset in the system? This is very important. Again, this is general. This is not only applicable to assets under construction, but also to any other fixed asset. The first important point is that the asset must be controlled by the UN. So this is what we call the control principle. If we have an asset that is not controlled by UN, will not be an asset. And then notice that it says controlled by UN. It does not mean that UN acquired or paid for it directly. Okay, so we can have an asset that is owned by a different entity, but if we have control over it for more than 1 year, it's a candidate to have a fixed asset. Can you hear me well from Unifil? Okay, I will try to speak louder because I think it looks like we are having some problems. So I will try to speak louder. Thank you for the feedback. So okay, let me continue then. Another capitalization criteria is if this asset is bringing economic benefit or has a service potential. So basically, if we are using the asset or UN is using the asset. The third UN capitalization criteria, it's important because it has to do with the useful life of the fixed asset. It has to be more than 1 year. But of course, for assets under construction, this applies normally because we are not building something that will last for less than 1 year. And the part that is, let's say, well known by everybody is about the cost threshold, capitalization threshold. So only assets that meet the established capitalization threshold will have or must have a fixed asset master record. Now we'll discuss later about this. So in a nutshell, and then you have more information about it in the corporate guidance that you can find in ipsas.un.org. So you can go and check the part of the property, plant, and equipment for further details. But these are the 4 capitalization criteria. The item needs to be controlled by UN. Okay. It should have service potential or bring economic benefit. It has to last for more than 1 year, and it has to meet the capitalization threshold. Now, how does this apply for assets under construction? It's in the following slide. Can you hear me better, Daniel from Unifil? Can you hear me better? Please confirm. So what about assets under construction? This statement is absolutely important for you. Okay, so please make sure that you are paying attention now. Assets under construction capitalization threshold has to be aligned with the assets to be created. So if you are building, for example, a real estate building, its capitalization threshold will be 100,000. So if it does not mean that you don't need a fixed asset or an asset under construction until you reach that amount. If you know that or if you estimate that the fixed asset that is the result of the construction activities will be above 1,000, 100,000, it will be in a scenario. So let's say that the capitalization threshold of AuC has to be aligned with the asset that will be constructed eventually. Okay? So AuC, but it's always, let me ask you one question, and then you please reply using the green check or the cross. So for assets under construction, is the capitalization threshold always $100,000? Can you please reply yes or no using your green check or your cross? Is it for AuC always $100,000? What do you think? Right, some of you are replying, a few of you are saying yes, some others are saying no, and some others are not replying. So, okay, so the point is it depends. So it's not always 100,000. It depends on the asset that you are building, okay? It depends on the fixed asset. So you'll need to go and understand what is the construction, what you are building actually, and then the AuC capitalization threshold will be the same one. Okay, thank you. So let me continue with the slide. So the cost of the self-construction asset comprises only, this is also an important. So what cost should be capitalized? I think some of you did the online exam yesterday for the pre-assessment, and there was a question about it. So what type of cost can be capitalized? So the cost of a self-constructed asset comprises any cost directly attributable to bringing the asset to the location and donation. So it has to be necessary. So as a summary, it has to be attributable and traceable, which means that the cost needs to contribute to the value of the asset. And when it says necessary, it means that there are some, okay, someone is asking me about the capitalization threshold. Let me just go back. So let me rephrase. Thank you for the question. What I was saying here, and just please allow me to repeat again, is that the asset under construction capitalization threshold is not defined as 100,000. The capitalization thresholds are defined for the fixed assets. Now, the type of asset, real estate and building and infrastructure, this is an example of assets under construction and has its capitalization threshold defined as 100,000. Okay. If what we are building is exactly a real estate building, then the capitalization threshold will be exactly that. But if we are building something different, like, I don't know, maybe you don't have examples where you are building machines, but if you are building a machine, the machine will have a different capitalization threshold. So it will not be 100,000. If you are building a software, perhaps the capitalization threshold is different, right? So is it clear? Do you understand now? Can you please reply yes or no if this is clear? So I give you 1 second to reply. So, okay, thank you so much, and thank you very much for asking the question and helping me to go back. I really need you to interact with me, otherwise I don't get the feeling if I need to repeat it because I don't see your faces. Okay, so thank you so much. Let's continue then. I was saying about, next slide is about costs that can be capitalized, and in a summary, they have to be attributable to the construction and also the point of necessity about it. For example, this if something is necessary, a good example would be if we are building something, right, and then there are some defects and we need to they need to work on the defects to fix them. The fixing of these defects may not be attributable to the asset under construction because this one is not bringing a value to the asset. But anyway, this is a policy matter, and we can also discuss further once we are all together with Gitaje and Muriel and Kirill that will join from New York. If you have any point about the capitalization of different costs. Now, what was the valuation in terms of valuating the assets? I think we were using as a current valuation methodology. We were using replacement cost methodology for assets under construction, right? And we are using right now actual cost for equipment. So that was what was before, and we have two types of valuation methods. One is actual cost, which is basically getting from the transaction the actual expenditure, and we have fair value, which is replacement cost. I think, correct me if I'm wrong, but I think you were using replacement cost for so far, right? And now we are moving to actual cost also for AuC. So that was a very general introduction about IPSAS capitalization criteria and any other type of information that may be important for you to get an idea before we start really touching the end-to-end process for assets under construction. So now is when I will ask you to pay full attention, because if you get a good understanding of the end-to-end process, it's going to be much easier for you to follow the whole training. Okay. So please remember that I have I have visibility on your, also if you're paying attention to your screen or you minimize and you went to Outlook and any other thing. So please be with me during the following part of the session, okay? Because I think it's very important for you. First of all, let me discuss about what users are involved in the end-to-end process for assets under construction. I'm listing here the three that are involved somehow. You have project management users, okay? So we have project management user, and this is roles PP01 and PP02. And this is the role that will help you to create a project in the system, okay? As I said, now we have to create project structures for any assets under construction, and for that reason, we will need PP01 and 02, and also FA16 may have access to it eventually. We will discuss later, and this is the role that is normally assigned to. This is the role normally assigned to engineering section. Okay, sorry because it went. Okay, I wanted to highlight 1 second. So this role is assigned to engineering section. Okay. Then we have PMU, PCIU that is assigned with the role FA15. The role of FA15 in the whole end-to-end process is very little. It's a manual creation of the final asset. So this will not be, let's say, a main role in this end-to-end process. But what is also very important is FA16, which is Asset Accounting Senior User, and is assigned to Finance. So if you realize, if you are attending this training, it's because you are either PP01 or 02, or you are FA16. Then this part of the FA15, you may talk to them because they know the type of transaction they have to do. It's very well known for them. So, but you need to understand the end-to-end process. Okay. So now this is very important. This is an end-to-end view, but it's a high level because the assets under construction process has plenty of steps. So I managed to make like 4 groups on this all sequence of steps, trying to help you understand. Okay. So if we understand the flow from left to right, the first, let's say, high-level step is the setup of the cost collector and the funding. We will see later what does this mean, but basically, if you have an asset under construction, let's put a practical example. Like if you are in your mission and then you have to build a new or construct a new compound, the first step for this will be setting up of the cost collector, which in other terms is basically creating a project in the system, where you're going to explain, where you're going to detail there if you are going to have a camp, if the camp will have how many buildings, if it's going to have roads, and if it's going to have security fencing or whatever. So any asset that you're going to you are going to construct or that any asset that is part of these construction activities will be reflected there. So the first step is setting up of the cost collector. Do you, let me ask you a question, do you understand what is a cost collector? Or we will need to discuss it later. Are you familiar with the concept of cost collector? Can you please reply yes or no? All right, so I see, okay. Like 75, 25%, 25% of you are saying no. So no worries, we will see it on the session, I think it's tomorrow. But as I said before, the cost collector is only a tool that we have in SAP to keep a list of all the expenses that happen related to a project. So it's like having basically like a notebook where if we are in the construction of in the construction project of this new camp, we will start tracking there. Okay, so we hire a consultant, an individual contractor to work on the road. So we'll track that. So we are hiring the services of a construction company that will build the wall. So we track that. So we'll have to use bricks from the warehouse to build all these buildings, hospitals, and accommodation. So we keep track. So this cost collector is basically an element in Umoja in SAP that is collecting the cost. So at the end of the month, we can say, all right, this month we have expended all this money on these construction activities. So the first step on the whole end-to-end process is setting up this cost collector and adding funds. And we will see later, because if we don't allocate budget from FN, I mean, we will not be able to use it as an account assignment in the budget relevant transaction. So see, this is the first step. What is the next one? Collecting costs. So once we have the project, all right. Yeah, someone was asking if the cost collector is related to WBS. Very good question. Thank you. Yes, the cost collector, for instance, is the project. And then when we build the project, we are creating what is called WBS elements, right? So when we talk about cost collectors, yes, we are also talking about WBS elements. Okay. Okay, Yasi, I don't know if you can hear me. If for everybody, if you are experiencing noise or you have problems to hear the voice, then remember that we will also send the link later, and in the link the voice will be clear and loud. So if at any moment I will try to speak louder again, but if you are still experiencing technical issues, you can also see the video later. So let me just recap. First step, setting up the cost collector and adding funds, right? Adding funds will be something done by FM officers. But then the second step after this is, let's say, setup, is the collection of costs. So once we initiate the project, then the construction activities will start, and then we will be collecting costs like regularly, like in the operational part of the project, while all the activities is happening. So if we have construction services being delivered, we will collect these costs. If we have materials being issued out from the warehouse, so we are using, I don't know, plumbing materials or bricks or crystal windows, any material that you have in the warehouse, it will be collected or will be tracked. If we have consultants working for the construction project, it will be tracked. If we have any new position that has been advertised for the construction of this new camp, we can track also these expenses. If we have military contingent contributing to the creation of the camp, it will be tracked. So during the process of constructing the project, we will be collecting costs. What will happen at the end of every month, because we want to capitalize the assets under construction, need to get value as we are building, right? So at the end of the month, we will take all these costs that has been incurred monthly, and we will settle them to the AuC. So what we are actually doing is capitalizing the costs that we'll be collecting. What do we mean by capitalizing? So we will remove it from our expenses accounts, and we will bring it to the asset account, to the fixed asset account. Okay, is that clear? This is what you see here It's a kind of cycle that will happen monthly. So every month we will be collecting costs, and at the end of every month we should be settling the cost to the asset under construction. Is this clear? Can you please click on the yes or no if you understood these two high-level steps? So the action of collecting costs is basically keeping track of, all right, it's keeping track of all the expenditures or all the expenses, sorry, and all the costs that are incurred during a particular period when this cost is directly attributable to the work, to the construction, as it was defined in the IPSAS capitalization criteria. Is it clear? I see only 7 people answering. So can you let me know if you understand what we mean by collect costs? All right. Thank you. Thank you so much. Now, okay. 1 second, that there are a couple of questions. Yes, it's the same as internal order. Yeah, the concept itself is the same as internal order, but now we are talking about project mainly. But yeah, as a collection of costs, is the same as internal order. Very good point. Someone is asking who is doing the settlement of the AuC. Do not worry. I mean, it's done by FA16, but do not worry now about who is doing what. The important is that you get the whole business process as an end-to-end, and to make sure that it makes sense for you as well. 1 second, that there is someone else that is asking. Yeah, for the particular questions about what happened when we reach the corresponding threshold, we will see them in detail later. But basically, it doesn't matter. Once we are tracking and settling the cost, everything is capitalized under the asset under construction, and then only at the end of the process we will have the final asset. So thank you for the feedback. If you understood properly these first 3 steps, what is missing now? So what is missing is what happened once we complete the construction, once we complete the building. So if as part of this camp, we are building a hospital, so we want a final asset to be created, and this happens as a last step of the process. So we have four high-level steps: the setting up of the cost collector and the funding, which is like preparation; collection of the costs, which is basically tracking expenses; settlement of this cost that is bringing this value to the AuC, to the asset under construction, let's say asset master record. And then once we finish, we need a final asset to be created, and this will be created manually. And then we do final settlement that will bring value from the AuC to the final asset. So in all this process, you have to notice something that at the beginning maybe is not so obvious. There are 2 assets here. The first one is the AuC. It's an asset master record in the system that gets the cost to be capitalized from the cost collectors. And then there is a second asset. If we are building, if we have a very simple scenario where we only have a building, there is a second asset that is created, which is the final asset. This second asset is created manually. So at the end of the project, we will transfer the value from the AuC to the final asset. And we need to have 2 different assets, because this AuC asset is a particular type of asset, and for instance, it does not get depreciated, because you know that assets under construction, as per policy, they don't lose value. Only depreciation is applicable to an asset that is finalized. So notice, please, that in this whole process, there are 2 asset master records. One that is called AuC, and is the one that is getting the value from the cost collector. And once we finish, there will be another one that is the final asset that will get the value from the AuC. Is that clear? Could you please answer to me yes or no if I explain myself properly? So we have 2 assets. The one is AuC, does not get depreciated, and gets the value from the cost collecting activities. And then after we complete, there is a second asset that will get the value from the AuC. All right, someone was asking something, 1 second. Yeah, about the collection of costs. We have, just for you to know, we will have a particular session on this and a particular session on this week. So we will get to more into details. But let me just rephrase what is the collection of costs. While the construction activities are going on, you are incurring expenses that are going in finance. They are going to expense accounts. So you spended your money. You used your money to acquire things that now you are expending. So maybe you are receiving services from a plumbing company or from a construction company, or maybe you are hiring a whole construction company to build everything, or maybe you hire consultants and you are paying for their services. And then through the service entry sheets, through other type of transactions, you are tracking expenses. You are using your budget and you are generating actuals. So all these actuals are tracked by the cost collectors. That could be an internal order or could be a project. You may be more familiar with the concept of internal order because it has been used previously. So this cost collector is basically tracking all that. Okay. Questions about who will do that? We will do what? We will reply later once we show, because this is only high level. So if you understood now the process as a whole, and it looks simple, I hope, then we will go to more detail. So just focus on these 4 steps. So the settlement to the final asset is depreciable. Yeah, once we settle the cost to the final asset, depreciation will start. But okay, now we're going too much into details. So just hold on some of your questions. If you have questions about multiple assets, we will take them later. Okay. So let me please go ahead. The important is that you understood this process as a high-level process. Is it clear? And you told me yes, so then I can continue. Just hold on some of your questions and we will reply them later. So to summarize, you have also here the information. The asset under construction goes through 3 main phases. I mean, it's actually 4, so maybe I have to change the slide. Cost collector is set up and funding for the AuC is budgeted. Monthly activities. So until the asset is completed, costs are settled monthly to the AuC. And once the AuC is complete, there is a final settlement to the final asset and the cost collector is closed. So remember that these 2 in between are monthly activities. So we will spend some time during, so let's say that the green box happens at the beginning. Then during the project, you have always this blue box and the yellow box. And then at the end, we have the orange box. Okay, is that clear? Thank you. Thank you. And I appreciate every time I'm asking if you reply through the chat, because it makes me understand if you are getting the idea. So now we are going to go a bit more into details if you understood the whole high-level overview, and we are going to see what the steps are within these green boxes or different boxes. So I was saying the green box is what happens before we start with the activities. So what happened actually in this setup of the cost collector and funding? So we have to create the cost collector, that is creation of the project, basically. And then the funding will be done also by FM users, and they will call it allocating budget. Here we have 2 different processes. The one that you see in green, I mean, both, I kept these 2 in green because I still want to give you like the idea of how many steps you have within each high-level process, but we will see later who is doing what. Now, for now, please focus on what needs to be done, and then we will see who is doing what. I know that for you it's important because you have your own role, so you want to understand, do I need to do that or I don't care? But it's not the point. Even if you don't do it, you do care because you need to understand the process from end to end. So you have to pay attention even if you are not involved, and then we will see what is your part. Setting up of the cost collector and funding. These are the 2 first steps. Collection of the cost, and this is one of the monthly activities that we were mentioning before. So what type of transactions we will have here. So we have here procurement of goods and services. As I said, if we are hiring a construction company or vendor, if we are hiring a consultant or individual contractor, this part of the procurement of services. Okay. If we are using materials from stock, this is another process which is involving inventory management. An important point needs to be said here about DPKO and SPMs. As per instructions from New York and the policy, you know that all the procurement of equipment and expendables has to go to inventory, right? It has to go to the warehouse. So this step here is going to be very important for you because every material that you will use will be issued out basically from the warehouse. Another step is payroll run. Is also another way of collecting costs. What typical example will be if you are, let's say, hiring a particular position, maybe an architect or someone that is hired temporarily for the duration of this project. You also want to capitalize the expenses of their salary. So this will be also part of the collection of the costs. And then there will be, okay, we'll see later some other examples like that are out of these three. Like, for example, if we are using military contingent to help with the construction, we will track it in a different way. But these three steps that you see there are the main examples of cost collecting activities. Is this clear? Do you understand these three steps? Procurement of goods and services, issuing materials from stock, and payroll run. Could you please click on the green check if this is clear or you want me to insist on any idea? Procurement of goods and services is anything that you initiate with the creation of shopping carts and purchase orders. Issue of materials out of the warehouse is what we do in inventory management after the commission of Galileo. And then payroll, you know very well because you get your salary monthly, hopefully. I have another question. In the allocation of the budget, how do you determine which commitment item to use? Okay, that's a very good question about funding of AuC. And we will see this one, I think, tomorrow, if I'm not wrong. So, but basically, based on the project, you will have to determine what type of, you will have to explain what type of material you're going to use and do some analysis on type of materials IDs, and then from there you will determine the commitment item class. But we will discuss that one tomorrow. And it's very important that, and that's why engineering section is also invited to this training, that you both understand that you need to work together to, for instance, to define the classes that need to be used for this project. And this also is related to the plan of the project itself. Okay, thank you. All right, we have everybody understanding the collection of costs. So now we go a bit more on the detail on the monthly settlement. Okay, this is maybe more new to you. So this third phase of the AuC end-to-end process is what happened at the end of the month. And then essentially, you will need to be reviewing the project to see if there are new expenses incurred during this month, during the current month. And then the system will create automatically some sub-assets. And then you have to, FA16 will need to perform some transactions that will settle the AuC, I mean the cost to the AuC. Okay, give me 1 second. I'm going to drink water. 1 second, please. So when we talk about monthly settlement, there are 3 steps. The first step is basically a kind of reporting, let's say, exercise, where you are going to use some T codes to get the cost that has been allocated to this project during the I mean by these transactions mainly. Is that clear? Then we have a second step that normally is done automatically by one of the T codes that we are using, and is the system creating sub-assets if it's necessary. This is a bit, a bit abstract, maybe it's a bit complex, the concept of sub-asset, and it's going to be easier for you to understand when we do the practice. But for you to know, sometimes the system will need to create more than what asset under construction if it needs to separate because we are using several fund centers or because we are changing budget periods. So if you don't understand very well this step, don't worry, because it's very technical, and I think once we go to the system and we practice, you will understand it better. So now, for now, just know that there is something creation of sub-asset, but do not pay too much attention to this one. And then there is another T-code that will settle the cost to the AuC, to the asset under construction. So as you can see here, it makes just review the price to see if there are new costs, and then you settle it to the AuC. There is a question about policy, which is if the project is less than $100,000, do we still need to create work breakdown structure and AuC? This is a policy question that we'll need to discuss maybe with Gitayo when he's in Valencia. So please keep this question. From the project point of view, I think so, but maybe the point is that there will not be a fixed asset eventually. So you may not need to have the according to the policy, if the cost is not over 100,000, you will not have to create the fixed asset. But if you have to use the project or not, we will discuss it later. Sorry that I got a question and I went out of the flow. So let me please recap. If we were reviewing the end-to-end process, so we said the first phase is set up cost collector and funding, and then we have to create the cost collector and allocate budget. Then we have collect costs. So it's the second phase where we are, and this happens monthly, when we are procuring goods and services, using materials from stock, running payroll, and then some other transaction we will see once we are together. And then at the end of every month, we have the monthly settlement that basically consists of reviewing project, which is running reports to see if there are expenses that happened during this month, and then settling this cost to the AuC. So this monthly settlement has mainly two parts. This step here, we will discuss, it is very technical and it does not have, let's say, a business, much business meaning. So and this will happen monthly. So what is the final step of the end-to-end? We said it's the orange box, that is the settlement to final asset. And this one has many steps as well. Let me just review them. As you can imagine, we will need first to review the project to understand if there are costs to be capitalized, and also if the project is completed, etc. Then there is another step that is called work is technically complete, and this is a step that basically means that we go to the project and we say it's completed, or this building is completed, or this road is completed, so it should start, we should have a final asset. Yeah, can you hear me well? Can you please, let me just try because people are experiencing again problems with the audio. Can you click on the green check if you can hear me well? All right. Okay, most of you can hear me well. I think some mission is experiencing problems with the audio. All right, thank you. So some of you are having problems, but you will catch up with the video, no problem, because the video will have a proper recording and a proper audio. So let me continue. We are in the final settlement of the asset. After we review projects, and then after reviewing projects, let's say the engineering section typically, or the project manager, will know that one of the buildings is completed. So they will need to check as technically complete this part of the project. And this will trigger the creation of the asset master. Now, this asset master that is to be created is created manually. So do not confuse this step with the one that is in yellow. The one that is in orange is what happens for the final settlement. And this asset master record is created manually by PMU or PCIU. So it is FA15. So the creation of this asset master record is manually, and this is going to be the final asset. This is the moment where the final asset is created. Before it was not there. So there will be a step that is quite technical, that is update of settlement rule. I don't want to confuse you with the settlement rule now. It's something very particular of the project, and we will discuss it once we are in the system and you are working with your own hands. Since we have already the asset master record, we'll need to settle the cost in the final asset. So it's a kind of concept similar to this one. This one was settling the cost from the transactions to the asset under construction, if you remember, right? Now we are settling the cost to the final asset. So if you remember one of my previous slides, I was drawing something. 1 second. Oh, I have so many drawings there. Okay. I was saying there are two fixed assets, the AuC here, and we do the settlement from the transaction to the AuC. And we have another final asset where we have to settle the cost again. So the one that you see here now in orange, this one is the second settlement. So this one is the settlement to the final asset. Okay, and we need to do something manually to prepare the system to settle to the final asset. If we don't do this step that is called update settlement rule, we will be capitalizing to the AuC. You see, now that we have a new asset, we need to tell the system, now we are going to the new asset. And this is why we have these settlement rules. So we will tell the system, now that the project is, we want to settle all the costs to the new asset. And then we do it and we capitalize it. Yeah, what you see in that you see update settlement rule and cost settlement is done by FA16, by the way, okay? So after doing that, we will have asset useful life update, because based on the type of asset that we are creating, it will have a different useful life. So this is something that is also done manually by the FA15 normally. So this is another step. And then since we completed the project and we allocated money initially here, if we didn't use all the budget, the budget will return, and then eventually the project needs to be closed. So the cost collector needs to be closed. All these 8 steps, we will see them in detail. Maybe, I mean, now during the session we are going to touch them briefly, but then once we are all together, we will go through all of them practically, and then we will discuss again. Now, it's very important, and I can tell you, this slide, together with the previous slide, is the main goal of this 1-hour session. So I need to make sure that you understood this slide. Could you please click on your green check if this is clear, and write something, or let me know if you want me to discuss again any point. This is what you see on the left side is the high-level overview of the end-to-end, and then we have inside, I mean, of every box, you have all these small steps. Okay, most of you are saying that it's clear, which is good news. Do not hesitate if you have any question, if you want me to repeat anything that you see on this slide. So no question? Yeah, thank you. Now we have a question. Very good. Okay. Now we have people asking to repeat. All right. So I'm going to repeat eventually the final settlement. I'm going to recap quickly the first part because I think it's easier to understand. First step, setting up the cost collector and funding. This is basically creating the project in the system and allocating budget, which is funding the AuC. Very good. Collection of the cost. This is how we track all the expenses that we are going to incur during the construction. So we want to track people that we are hiring, consultants that we are hiring, staff members that we are hiring for that, material that we are using out of stock, external vendors that we are contracting, and we track everything in the project, and that's why we call it collecting costs. Now, at the end of every month, our AuC, our asset under construction, is getting value because we are building something, we are constructing something. So at the end of every month, we want to capitalize some expenses. In other terms, or in other words, we want to give value to the asset under construction because it's not the same. From IPSAS or from accounting perspective, it's not the same to have an asset that is just the ground that we didn't start building anything. It's not the same that having an asset where we spend already $1 million, right? The asset under construction value needs to increase while we are incurring expenses, while we are spending money. So if we spend $100,000 in bricks, and now all these bricks are in a building, all these expenditures or these expenses, these costs need to be capitalized. And how do we do that? In the monthly settlement. We review the projects, we see how much we have spent in this project. If we hire the consultant, we have 2 months of consultant services, 2 months of contractor company, whatever. Consultant companies, construction companies, whatever is there. We review all the costs and then we settle to the AuC. Settling to the AuC means adding value to the asset under construction. So before we settle to the AuC, we only have a list of expenditures, a list of expenses that has been incurred. But the AuC value will be 0, right? So we settle to the AuC the cost. Like, let me put a practical example. We spend $10,000 in a construction company, and we spend $20,000 in materials. Before we settle, the AuC value is 0. But we know that we spend that part in the project. So we use the settlement process to bring value to the asset under construction. So we will take these 10,000 that were spent in the construction company and the 20,000 that were spent for the material, and we will bring this value to the AuC. And now the value of the AuC will be 30,000. So if someone is asking, in case we miss such expenses in 1 month, can we settle in the following month? Yeah, it's no problem. We are doing that. We are saying this is monthly activities. But as long as the expenses were tracked and they are linked to a project, you can settle them. Okay? And if they were not settled and you have a situation where the project was not created or something like that, we can see the ways to do it because it's possible maybe to use journal voucher. So this is what is done, and we say monthly settlement because we want to give value to the asset under construction periodically because we are already expending that and we don't want it to have it in the expense account when it's actually something that was capitalized. Now let me recap again the final settlement part because it's the most important part of this presentation. We say we review the projects to see if they are completed. We mark as work is technically complete if the project is complete. Right? This is only an indicator. Let's say it's an indicator for finance people, for finance colleagues to understand that the project is completed. So this is managed normally by the project manager. After, okay, there is a question. 1 second. Yeah, the creation of the cost collector. The question is if the cost collector is created it can be created at any moment of the project. Yeah, you can do that, but you should have it before you start. Okay, but we will discuss this one practically. Let me just complete the end-to-end, please. So for the final settlement, we review the project. We see if it's completed, and that's fine. Once it's completed, okay, we already finalized the building. Now we need the final asset. So we request FE15 to create the final asset. Once we have the final asset, we want to settle the cost to this final asset. So we tell the system, now we have a final asset and this is the asset number. So the system will be ready to do the settlement to the final asset. What is actually settlement the cost to the final asset? So it means taking the value from the AuC that we were adding value during the settlement process monthly, and then we bring all this value to the final asset. Okay, so now we will have a final asset that has the value of all the expenses. After doing that, we will update the useful life, and then if we didn't use all the money, we'll return it. All the funds will return it, and if we finalize the project, we close the cost collector, which is the project. Okay, I think now it's a bit better. So let me just continue. We are going to the next slide. If you don't have any other question, okay. Remember our monthly activities: collecting costs and settling to the AuC. So what you see here in the same colors, it's in the same colors because I want you to understand which steps belong to each phase of the AuC end-to-end process. So these steps in green happen during this phase, these steps in blue happen during this phase, this yellow happens here, and the orange steps happen during the final settlement. But now you want to know who is doing what, right? So to know who is doing what, we have another slide that will give you an idea of who is doing what. The list of steps that you see in front of you is exactly the same one as you see here. Cost collector, right? Allocate budget, procure goods and services, It's the same thing, okay? Don't get confused. If you understood this slide, you already understand the AuC end-to-end process. Don't get confused. This is another way of seeing the same thing, but for you to get an idea of who is doing what. So you see, create cost collectors is orange, so it's done by within projects or internal order. Okay, in which module? So who is working also in the project is a PP01. So it will be normally done by a project manager in the engineering section, but with the collaboration with FA16 because some of the points in the project are quite finance oriented. Allocate budget is done in FM, so it's done by budget officers. The ones that are in, I don't know what color it is, purple, it's done by supply chain. It's a supply chain process, okay? So this one is done by procurement, or actually requisitioner when we are raising shopping carts, and issuing of materials is inventory management. Payroll, it's payroll, right? And then we have activities within finance that is going to be mainly FA16 and FA15. So these steps here, review project, create a sub-asset master with another T code, and settling to the AuC is done by FA16, so it's finance. Review of the IO project is finance. Orange is again in project, so whenever it's in project, engineering section is going to be involved. So work technically complete should be done by engineering section. Create asset master is the final asset. Remember, this is the final asset. This is done by FA15. It will not be strictly finance, but it's in SAP is the finance module. Update of settlement rule. This is done in the project, but it has to be in cooperation with finance as well. And then the final settlement is done by FA16, and asset useful life is done also by FA15 actually. Now this one is not giving you the roles exactly, but I have the following slide that will give you the exact role. But I think you get an idea here in what module each transaction is done. Okay, is this clear? This you have here a legend and a color code. Do you want me to go through it again, or is it clear? Please use the green check or the red cross if it's not clear. And do not hesitate to click on no if you didn't get it, because I don't even know who said no. I just get the statistics, so I know the general feeling of the class. So if you didn't get it, just do not hesitate and say no, and then we will recap. Okay. So as I said before, at the end of the day or tomorrow, if you are going to study, take this slide and go through it and see if you understand the whole end-to-end process phase by phase, and if you understand in general terms each of these steps. If you want to know in what module or have an idea of where is some of these transactions done, you come to this slide and you get an idea. Oh, okay, this is supply chain. All right, I understand. This is budget. Okay, I understand. Okay, these two tones of oranges, it happens between finance and project. Okay. All right, I see that you have a good understanding of this slide. So now let me just go step by step quickly, because we only have 10 more minutes and we will discuss this one in the following presentations. But I want you also to get an idea of each of these steps, and you will have also in the presentation material. So now we go step by step, seeing who is doing what and what is this step about, so you have a better description. So first phase, which was setting up cost collector and funding. So the initially green box. So the creation of the cost collector is done by asset accounting senior user or project user. This is FA16 or PP01, PP02. So both of you, FA16 and PP0102, you have access to the project. Normally, this should be created by engineering section, but some of the fields are they have impact in finance, so it requires both of you to work together. So allocate budget. It's not, you don't have a tag here, I think, but it's done by FM user. Okay, you'll have another game. We will have a game once we are all together in Entebbe to reinforce that. So the creation of the cost collector is basically the creation of the internal order or the project. But as we said, for new project, for new assets under construction, we have to use projects. Allocation of the budget is adding budget to the funded program. We will discuss tomorrow what is a funded program, but those two steps, I think we saw them with enough details. Do you have any question about these two steps, or you understood them in terms? Do not worry if you are missing details. If you understand let's say in general terms, or the idea of creation of the cost collector and the idea of allocating budget, we are fine. Do you have any particular question about creation of cost collectors or allocation of the budget? Okay. There is a question about the from Bashir about the creation of the project when it's related to grants. This one we will discuss once we are all together, because it's a bit the scenario is a bit more complex. Still, you have the project. You just will need to add a reference to the grant. But this one, I think, is better if we discuss it in the class. So for this overview, I think that's fine. If you don't have, if it's clear these two steps, please click on yes, so I know I can go to the next slide and we are going to finalize the presentation. Is this clear? Creation of cost collector and allocate budget. Please click on the green check. All right, very good. We go to the next one. Collection of costs. As said, we have procurement services, issuing materials from stock, that is supply chain, and we have payroll. So here in this slide, you have basically again the information that we have been discussing during previous slides. So you will have not only the recording, but I will send you this presentation so you can read it when you have time and make sure that you more or less understood these points. Procurement of goods and services can be procured with reference to WBS element or internal order, and the cost will be charged to the cost collector at the time of goods receipt or service receipt. We will have a session for collecting costs on Thursday, so we will discuss this one in detail. Issuing materials from stock, I think that was also well understood. Okay. And then payroll run, if there is a staff member that is fully dedicated to the construction, we can track these expenses. This is something we cover. I think that is we explain enough, and I can go ahead. If otherwise, just let me know and raise your hand or let me ask. Sorry, there was a question about budget. I just see it now. 1 second. Does budget allocation have to align with the mission approved budget? Yeah, this is an FM question, but I think so, right? Because when you are exactly, that's why Elizabeth from BFD, I think, was requiring everybody to use projects. So the approved budget could be also reflected in the funded program. Okay. But anyway, for these policy questions, if you want, we can get clarification when we have the colleagues from New York. So once we are in Entebbe, all these policy questions, just write them down so you don't forget them. And then we ask also to Gita, Kirill, or I can also write to accounts, to all OPPBA or controllers office to get confirmation. Okay, let me continue. The accounting entry, do not worry, we'll discuss it once we are all together. Okay, so it's a bit too much detail now at this moment. The monthly settlement that you were asking, so that is a good opportunity to have it clear again. Review of the projects or internal orders. So this is checking if there are costs that were incurred that need to be capitalized or costs that need to be settled. This is done by AA senior user. Wherever you see AA senior user, it is FA16. Okay? So do not get confused by the terminology that sometimes is changing from one slide to another one. AA senior user is asset accounting senior user, is the same as saying FA16 user role. Okay, there is a question about depreciation, but I will answer it in the following slide, so just hold on. This is done by AA FA16, then creation of sub-assets. It says AA senior user, but it's done as a consequence of one of the T codes, but they are not created, let's say, manually. And then settlement to the AuC, which is bringing all the expenses that were tracked to the AuC. Here you have the list of T codes, okay, that we will use during, let's say, the workshop in Entebbe. I mean, the training in Entebbe, the in-person part of the training. And you have basically the description of all these steps. So the review of projects will happen with some of the T codes. We will use CJI3 and another one. Creation of sub-assets happens as a consequence of this, which is basically getting the cost and preparing the asset to be settled. And then we will have CJ88 for settlement of the AuC. All right, is there any question about the monthly settlement? You have your last chance to ask it. I know this part is very abstract, so I'm afraid you will not understand it fully until we practice. But at least get the idea that monthly we need to, let's say, analyze the costs or the expenses that happen related to the project, and then we have to bring these expenses to the asset under construction as a value for the asset under construction. I know it's a very simple explanation, and maybe some finance officers may think that I'm oversimplifying the point, but as an overview, I think that would be a good explanation. Then we will see how this happens internally in the system and what is the FI impact once we are together. Okay, so I don't think, all right, everybody says it's clear. Okay, thank you. So last part of this end-to-end process was the settlement to the final asset. We have to review again the projects that are there and if there are costs that are pending settlement. Then these two steps can be done by, when it says PJ, it's the project user. So it will be PP01 or 02, and where you see AA senior user, it is FA16. So these steps can be taken by any of them. Work technically complete is simply going to the system and saying we completed the project. Creation of the asset master. This is important that you notice it, because the creation of the asset master is done by AA user. AA user is not FA16, it's FA15, 1-5. So this is done by normally it's PCIU, PMU, PCIU, PMU, which is FA15 user. And if the asset is created manually, they are used to it because we already train also them in fixed assets. So for them, it's only you have to tell them that they have to manually create the asset master record, and they know how to do it. Then there is a step that is called update of settlement rule that we will see once we are all together with the hands on the system. But for you to get an idea, update of settlement rule is related to this previous step. Since now we have a new asset that is manually created, in this step we will tell the system that there is a new asset that is going to be the final asset. So when the system goes and settles the cost, we'll settle to the asset that has been created manually. Here you have a summary of the codes that will be used for this process, and a brief explanation that I think we cover enough during this session. So before the settlement to the final asset needs to be created manually using AS01. This is what I was telling you, that this step is done by FA15. The rest is always PP01 or FA16. So this one is the only one that is not done by any of you. Is that clear? Can you please use the green check if it's clear? That you understand the difference between AA user and AA senior user? Use the green check, please. All right. So, okay, someone said, okay. All right. No, I need to repeat something because we have a bunch of people that couldn't understand that part. So, let me just go one second to the first slide because maybe I showed that and it was too early. Discard 1 second. So I go to this first slide and you understand it better. Where is it? Well, give me just 1 second, okay? So I drag this here, and I think it's going to make more sense. So you see now, those are the roles that are involved in the assets under construction. You have engineering section. You have this role, P01 and 02. And in a nutshell, your work is managing the project in the system. All right, this is a very high-level summary of your tasks: managing the project, creating the project extractor, reviewing the elements, changing the status of the project, finalizing the project, marking as technically complete, this type of things. This is what is done by engineering section. Then we have finance. Finance section, asset accounting senior user has the role FA16, and it's called asset accounting senior user. This is normally the audience that you have in this workshop, finance senior users, and they are the ones doing the settlement of the cost to the asset under construction. And since it is very important how the project is configured, these two members, these two users, they have to work closely. And that's why you are together in this workshop, and you will be sitting close to each other in NTM. But there is another user that is called FA15, asset accounting user. You see, it doesn't say senior. Senior is FA16. FA15 is another user role that is called asset accounting user. This one works typically in PMU or PCIU. All right, and it's his or her only responsibility in the whole AuC project process is creating manually the final asset. This role is the role that creates manually asset master records in the system. So this user here will go to SAP, to the system, and will execute a T code and will create manually an asset master record that this role here will use to capitalize all the cost of the project. Okay? Is it more clear now? Can you please, the ones that reply no, can you please click on yes if it's better now? All right. Okay, very good. Now we have Okay. So thank you for being honest and helping me to explain it better, because maybe it was not clear in my previous explanation. So now we are finalizing. It's only one slide, so we are finalizing the presentation. Thank you for your patience. Give me just 1 second. I go to the last one. So we discussed already, I mean, we mentioned these steps. That don't worry, because then once we are together, we are going to practice a lot each of them. So we have the final settlement, the second part of the final settlement, that is final settlement to the asset, and is done by FA16, so AA senior user, asset accounting senior user. Then the update of the useful life, because when we create when the FA15 user, the asset accounting user, creates manually the asset master record, there is another step that he needs to define what is the useful life. It's actually not an update. If you create a new asset master record, I don't remember exactly, but I don't know if what is the standard useful life for a building. Maybe, I don't know, 50 years or 20 years, I don't know. We will have this user role will go to the new asset master record, which is the final asset, and will update and will enter the useful life. Okay. Someone is asking if about the user roles, if PP01 or 02 have FA15 role. I don't think so. I don't think so. I think that is assigned with, unless you are a member of PMU for some reason that I don't know. But this is something that we can also ask for user provisioning. So if you keep these questions, so once we are together, we see if we can clarify with Kirill. That is coming from property management. And then the last two steps that are quite obvious, and it's returning unconsumed budget and closing the cost collector, which is closing the project. In this slide, you also have an explanation. There was someone asking if when does the depreciation start. This is replying to your question, sir. The question was if the depreciation starts in the final asset. Exactly. So once the value is transferred to the final asset, so the final asset will be capitalized, and then depreciation will start. So depreciation will start after settlement to the final asset. All right. So thank you so much for paying attention. I think this was the last slide with the information. Thank you so much. I'll give you again the floor if you have any final question. I know we went over the time that was scheduled, 5 minutes, but if you have any other question, just let me know. If you, after you read the material that we are going to send you the presentation via email, yeah, I'm going to do that exactly. Then I'm going to send you a presentation. Please go through it, read, and you have my email contact. So if you have any question, just send me an email. You have also my extension. Do not hesitate to give me a call. And if I see a lot of calls or a lot of emails, then I will open another WebEx link to clarify something that maybe I didn't explain properly. So thank you so much. Please read the presentation. Do not worry, you didn't get all details about the steps, because that's how we work. We need to understand first the general stuff, and then, let's say, drill down to the more accurate information. So please read the presentation, try to understand the general concepts and the high-level overview, especially the slide that I mentioned that has all these steps, let's say, summarized. And if you have any question, contact me and send me an email, and I will be happy to review it in a one-to-one conversation. Okay. Thank you so much. Oh, very good. There are questions that you were holding. All right. You see, if I don't ask you, you don't ask. So yes, I'm sharing the presentation. Someone saying, can we combine two different buildings built at different time to meet the threshold? I think the capitalization threshold is particular to every asset. So you will need to first decide there if you have one asset or two assets. So you have, when we set up the cost collector, you need to analyze how many assets you're going to have. So for example, if you have in the compound two small buildings and none of them is reaching the capitalization threshold, then maybe you don't have the asset. Unless you define but this is a policy question that we'll need to discuss with Gita. If the two small assets are part of the one main asset, maybe you can do that. Okay, so the question, if you have a particular example that is happening in production, track the question and we will discuss it in person. And then the second question, that is, if the AuC does not meet the threshold, the FA16 use return to expenses step on. Exactly, that is very good question. If during the monthly settlement we start capitalizing expenses, but then after the project is completed, we see that we didn't reach the capitalization threshold, there is a process to return all these, let's say, posting to the expenditure. We will discuss this one also in person. Okay. Thank you so much for paying attention and for resisting all this 1 hour 40 minutes paying attention. I appreciate that, and see you tomorrow around at the same time as of today at 10 a.m. Valencia time, and I'm sending the presentation to you in a few minutes. You may also receive a link with an end-to-end game that I prepare. I'm not sure if it's for this session or for another one, but you may receive a second email, and also you will receive the recording. Thank you so much, and nice to see you all. Even though I couldn't see your faces, but I see your names. Thank you, Deborah, and thank you, everybody. See you tomorrow. Have a good day. Thank you.